Good morning, and on behalf of Barclays, I would like to welcome everyone to the Private Bank South Africa webinar on wealth planning. My name is Amol Prabhu. I'm the country CEO for South Africa and the market head for the Private Bank franchise in Africa. I will shortly be handing over to my colleague, Mark Tucker, the global head of wealth advisory. But before I do, I'd like to provide a brief background on Barclays in Africa. As a franchise, as I'm sure many of you know, we've got a long history on the continent, and we've been serving clients here for over a century. And while our business has certainly evolved and adapted over time, our commitment to the continent and our commitment to our clients absolutely remains. We've established an office here in Johannesburg, where I'm based. We have South Africa-focused private bankers, and we have over 50 people globally that are focused on the continent. Many have come from the continent, many have covered the continent for over a decade, and many have lived on the continent themselves. Our Africa franchise is operational fully across 3 businesses: private banking, investment banking, and corporate banking. For today's session, we're focusing on private banking, how we support global families, ultra high net worth and high net worth individuals and family offices, through the lens of wealth advisory, types of visas, types of trusts, factors to consider, and common themes that occur when overseas considerations are being made. As a private bank, we also have a wider proposition: succession and estate planning, philanthropy, financial portfolio diversification, and also strategic investments, UK real estate being particularly popular. Within the private bank itself, we also have our international banking business that focuses on our mass affluent clients. This proposition is over 2,000 clients strong and is rapidly growing. I understand the audience for this webinar is mostly financial service providers, lawyers, auditors, trustees, etc. And so I'm keen for Barclays to be linking up with each of you and working in partnership with each of you for our mutual benefit and that of our clients. So in conclusion, I encourage all of you to think of the Barclays proposition, where a client has complex and multi-jurisdictional needs, where a client is looking for an independent, stable financial partner with a strong South Africa, Africa, and UK nexus, and where a client's needs may evolve not just from private banking, but into areas such as investment and corporate banking. So please feel free to contact me should you have any further questions on Barclays in Africa, or more specifically around our South Africa franchise. I would now like to hand over to our moderator for today's session, Mark Tucker. Mark.
Thank you, Amol. So to set the scene for the panel discussion, I think 3 things stand out from a South African wealth planning context. Firstly, we've definitely seen increased international mobility for South African individuals and families in recent years, notwithstanding, of course, the pandemic travel restrictions. And that's both inbound into South Africa, but probably more so outbound, with families considering a wider choice of destinations. I think secondly, high net worth and ultra high net worth families are clearly investing in more jurisdictions than ever before. When you factor in the increasingly complex global tax, legal, succession, and regulatory landscape, the need for our clients to take good tax and legal advice has never been so acute. And finally, we're seeing more demand from clients looking for help with their businesses, whether that's advice around governance structures or indeed help to expand their businesses internationally. So to make some sense of it all, I'm delighted to introduce my panel of experts in the form of Alex Hewazy, a senior wealth advisor within the private bank at Barclays. And Alex has a wealth of experience of helping families with their complex cross-border estate planning needs. So welcome, Alex. We also have Hanneke Farrand, a South African lawyer, now based in the Isle of Man. And amongst her many areas of expertise, Hanneke has helped many families expand their businesses globally. And last but not least, we have Richard Mulhern of Zedra Trust Company in the Isle of Man. And Zedra have been providing trust and corporate services for South African clients for many decades. And given the importance of trust to the South African client base, it will be great to get Richard's perspective. So welcome all, it's great to have you with you. The rules of the panel session are really simple. You can cover absolutely anything you like in your responses, apart from mentioning rugby. No mention of the British and Irish Lions tour or Rugby World Cup. That's strictly off limits, especially you, Hanneke. Joking aside, I'm conscious we've got quite a lot of content to get through in a relatively short period of time, so let's get straight into it. So Alex, the first question is for you. The UK remains a popular relocation destination for South African families. What would you say are the key things to consider prior to emigrating?
Thanks, Mark. So where we have clients coming to the UK, often when you first sit with them and they talk about thinking of becoming UK resident, they say, well, I've heard it's really complicated. The UK is such a high tax jurisdiction. You know, how does it all work? How does it fit together? And what does that mean in terms of what I need to think about planning my move? I think the starting point is really for anyone thinking of coming to the UK from any jurisdiction to understand how our tax system works, because from that flows a lot of the planning and the kind of practical steps, as well as the more legal and structural steps that need to be taken before landing. So the UK system is based on two concepts: residence, pretty easy to understand, and domicile, more peculiar to the English legal system. So the starting point is, if you're a UK resident, you're taxed on a worldwide basis, all of your income and gains fully taxed in the UK. The caveat to that is if you are non-domiciled and actually make a claim to utilise that status, then your foreign income and gains are not subjected to UK tax until and if you actually bring them into the UK or use them in the UK. With that in mind, the first question clients have is, well, how do I know when I'm a UK tax resident? You know, do I write to HMRC and say I've arrived? And that's really important to understand, because the way the UK tax system works is our tax year runs from 6th of April to the 5th of April. And the general principle is that if you're resident in any part of the tax year, you're regarded as resident for that full tax year. So you could arrive in January or February 2022 and find out that actually you've been regarded as tax resident 6th of April 21. We do have a statutory residency test, so we always recommend that clients take legal and tax advice and get an advisor to work through that test with them. It is complicated, but it will give you a definitive answer as to at what point, at what number of days will you actually start your UK residency, and that will allow you to time it appropriately and in the most efficient manner. The second point is really with a South African client. Well, how does all that fit into what I'm doing in South Africa? I'm leaving South Africa. What do I need to engage with my South African tax advisor? And they in turn will need to work on the UK with the UK advisors as well. And it's things like, when will I cease South African residency? Will I stop being ordinarily resident in South Africa? And what about exchange control? You know, some clients may be thinking of applying to actually become non-resident from an exchange control perspective as well. And how does all of that timing link into, becoming UK tax resident? Domicile is really important for this client base because it obviously will allow you to access a more favourable tax regime if you are non-domiciled. And this, it's an odd concept that English law has. South Africa doesn't have an equivalent concept, and it's really about intention, and linked to that is emotional connection to a country. Most of our clients coming to the UK for a fixed period of time, a particular purpose, unlikely that they would acquire a UK domicile, although the longer they stay, the more difficult it becomes to maintain that position. But some clients, and some South African clients may come and say, I never intend to go back to South Africa, I'm going to stay in the UK. And at that point, it's really important to engage with the UK tax advisor and discuss that decision and do a holistic review of the entire asset base, because there will be quite significant consequences of acquiring a UK domicile. Finally, what we work with clients with a lot from a private banking perspective is, how am I going to fund my lifestyle when I arrive in the UK? And this is where we say to them, you've got to work with your tax advisor and really identify and isolate what we call clean capital. And that's really your funds that can be used in the UK tax-free. And from that will flow, how do you structure your bank accounts? Are your investment portfolios still suitable once you arrive in the UK? And are all of your structures in an optimized position for when you enter the UK and start your tax residency? So there's definitely a lot to think about in that regard.
Thank you, Alex. As you say, a lot to think about in advance of the actual move. So moving to you, Hanneke, any South African looking to emigrate will clearly want to export capital from South Africa. How can this actually be achieved, and in which situations will South African Reserve Bank approval be needed?
Thank you, Mark. It's a very nice follow-on question from Alex's comments, because the issue is that you need to plan your exit from South Africa for tax residency purposes. It must coincide well with what you plan to do when you arrive in the UK. Now, the reason why this is important is up until March this year, there was a distinction between tax immigration and exchange control immigration. Like, for example, when I left last year, I needed to complete what was known as an MP336. It's an incredibly long list of detailed information that you submit to your authorized dealer, disclosing, for example, your statement of assets and liabilities for the last 3 years and whether or not you're a beneficiary of a trust. As from this year, the whole process of immigration and exiting capital is managed through the South African Revenue Service. It means that there's a consolidated list of information that you complete and submit to SARS. That you do, showing that you are ceasing to be tax resident in South Africa. You need to motivate that, give the details of your plans to leave South Africa and where you want to live. Once you get that clearance from SARS, you can start the process of applying to exit capital. So I think it is important for clients to know that it is maybe a slightly more consolidated process, but I can assure you the level of information that is required is still very detailed, and it's not an entirely simple process. But that would be the starting point. Once you've got your clearance, you can exit your capital. It is obviously also important to know that the 10 million Rand annual allowance is still available, and not everyone chooses to go through the immigration route.
Okay, thank you, Hanneke. So back to you, Alex. A key part of any move is obviously sorting out all of the immigration formalities. What are the UK visa options available for South Africans looking to move to the UK?
The UK has a whole host of different visa options particularly for internationally mobile or high-skilled individuals, and no doubt we will obtain a few more now we are post-Brexit. And really the type of visa you get depends. I think the starting point is to really think about what is my objective in coming to the UK. So for a lot of our clients, it's indefinite leave to remain and potentially a British passport. For others, they would like to start a business in the UK. They see it as a good place to hub international operations or potentially even new startups. And other clients don't really want to work here. They just would like to be able to spend more time here. You know, some clients say, I want the quicker immigration queue. So it's really dependent on what is it that you want out of your visa and what is it that you want to do when you're in the UK. So in terms of what we see, the main visa options, particularly with South African clients, the most popular one we see clients taking up from a private bank perspective is the UK investor visa. This requires a minimum investment of £2 million. And all of that money has to go into what they call qualifying investments. So broadly, that's shares or loan capital in active or trading UK companies. So it's kind of looking at investing into the UK if you'd like the right to live here. If you meet all of the requirements for that visa, including there is a residency requirement, which is different to the concept of tax residency, it's a different test. Then after 5 years, you will get indefinite leave to remain. There are expedited options. So for example, if you were to invest £10 million into those investments, you'd get indefinite leave to remain in just 2 years. The other visa we see quite a few of our clients coming in under is the talent and entrepreneur visa. And this is really looking at working in qualifying fields. So things, the usual suspects, medicine, science and research, technology, I think architecture is one of them as well. And that's, you would need endorsement from an approved organisation to come in under that visa, but it is one we see quite a few clients utilising. Interestingly, I think for South African clients is the ancestry visa. So for this one, if you actually had a grandparent who was born in the UK, you potentially could apply for an ancestry visa and be able to enter the UK on that. So there's definitely quite a few options. I think my advice is to really engage with a good UK immigration lawyer, one that knows the interactions of the UK Home Office and can give you the best advice in terms of what visa is right for you in your circumstances.
Thank you, Alex. So clearly quite a few options there. And as you say, taking good immigration legal advice well in advance of the move is absolutely critical. So Richard, I'm keen to bring you into the discussion now. I imagine pre-immigration prompts clients to think about setting up trusts, for example. What would you say are the common themes and reasons why South Africans establish overseas trust structures?
Thanks, Mark. Yes, there are a number of reasons why we tend to see South Africans establishing offshore structures. These vary from corporates to individuals. Obviously, while South Africa is a beautiful country with great people, great scenery and excellent food and wine, it's not without its social, political and economic challenges. And many high net worth South Africans want to ensure they have a safety net available, whether they choose to use it or not. A number of South Africans either have children living or studying outside the country and or have intentions to possibly emigrate themselves at some point in the future. A trust structure can have significant benefits in terms of asset protection, taxation, and ring fencing assets prior to migrating or emigrating. A trust structure ensures that these assets are independently overseen and managed by professionals well versed in their fiduciary obligations, which includes ensuring financial assets are performing as they should and have the correct governance. Or in terms of properties or chattels, they're maintained, insured, and managed appropriately. Having an offshore company can allow corporations and individuals to access markets that may have been difficult whilst based in South Africa. International financial institutions have a long and established track record working with corporates in well-regulated offshore jurisdictions. We've also seen arrangements whereby assets already externalised by South Africans have been settled into offshore trusts as part of an individual's will arrangements. So that's just a brief synopsis of some of the common themes we tend to see. Thanks.
Thank you, Richard. So back to you, Hanneke. A move out of South Africa may well be triggered by business considerations. What advice would you give South African individuals looking to expand and build their businesses internationally?
You know, Mark, I'm trained as a tax and trust lawyer, but having gone through the process myself, my advice is not tax or trust related. First of all, I would say it's important that you understand the environment where you want to set up your new business. You need to understand the regulatory requirements. I often find that clients get stuck, especially in an IP world or in a financial services world, even in a legal advisory world. They get stuck by the requirements that you need to, by the regulatory requirements in the jurisdiction that need to be met. Processes take longer to be completed, and details that must be provided to the local authorities. That's the first one. So generally now, what I say to a client is before we start with a tax structure, let's make sure that the business is viable in the jurisdiction where you want to go to. The second point is it's incredibly important that you have willing and able and mobile employees that can render the services that your business requires in the jurisdiction. I still see on a weekly basis, clients want to set up a business in an offshore jurisdiction, but they're simply not able to travel themselves or find the people who can actually perform the functions there for them. So those are the two hoops that I think you need to jump through first. That's my advice to my clients. Once those boxes have been ticked, then the funding setting up the right offshore structure follows very quickly after that. But it's just two very, very practical issues that I find that clients struggle with.
Excellent advice, Hanneke. So, Alex, Richard a little earlier, he covered the relevance of overseas trust structures for South African families. What advice would you give South African families with existing trust arrangements in place, where either the settlor and or the beneficiaries are UK tax resident, and especially those families where the settler is actually in the process of relocating from South Africa to the UK?
Yeah, so I think one thing that we often find clients miss is they do so much work around structuring their own wealth, and then they're about to come and you find out that another 50% of the wealth is held through trust and or corporate structures. And those are just as important, if not more important, to really think about before entering the UK tax net. Our experience with South African clients, I think, is that they'll often have a South Africa onshore trust as well as a South Africa offshore trust. And from a UK perspective, the way the rules would work is both of those structures are offshore to the UK and therefore equally subject to what I would describe as extremely complex and at times punitive anti-avoidance provisions that the UK would apply to them, where either the settlor and or the beneficiaries are UK tax resident. So it's really important to do a holistic view of all those structures before coming to the UK. And I would say the key areas to really look at, firstly, in our experience, we see that quite a lot of the South Africa structures are funded by way of a loan from the settlor. Sometimes my understanding is that's because of the South African donations tax. The UK review of that structure will focus quite heavily on the timing of the funding of the structure by way of a loan. The reason being is, depending on the timing, it could be that repayment of that loan, so drawing down funds of that loan whilst they're in the UK, could prove quite tax efficient, as it's potentially a way to realise some clean capital by having that loan repaid. The other area we see, and we see this with clients across a whole host of jurisdictions, is where they are trustees of their own structure in their home jurisdiction, and they're moving to the UK. So often what we find is husband and wife moving to the UK, they're settlor and trustee of, a South African trust, and they've arrived and they're UK resident. In that instance, that if there are no other trustees of that structure, which is often the case, that now the trustees are UK resident, the structure would actually be dragged into the UK tax net. And the UK, for a UK resident trust, the tax rate is quite high. It's the top income tax rate, and it's CGT on all gains. So it's really important to review that and see whether potentially before coming to the UK, you could appoint an additional trustee who's non-resident to potentially manage that risk. The third point is to look at the structures and look at, does the settlor and or the person coming to the UK who may be a beneficiary have any powers over the structure, not a trustee, but for example, as protector, has the right to veto certain decisions made by that structure, or often what we see, investment management may have been delegated to a beneficiary or the settlor who's now coming to the UK. There, the UK tax advisor would want to look quite closely to understand, is that still appropriate? What are the risks in continuing to have that role once the settlor becomes UK resident? And finally, really looking holistically at the structures and saying, should we make a big distribution out of one of these before you start your UK tax residency? Because then you could potentially use that money more efficiently in the UK. Do we need to reorganize the structure to make it more efficient for when you do want your distributions out of it? And how do we do that with the overlay of obviously the South African tax regime as well? So it's definitely complicated, but I think it's a worthy exercise to do before becoming a UK tax resident.
I agree, Alex. So, Richard, you talked a little bit earlier about some of the common themes you're seeing with your South African clients. Expanding on that a little bit, what are the benefits for South African residents establishing overseas trust structures, and what added value can a professional trustee provide?
Thanks, Mark. I think one of the primary aspects of what we do is peace of mind. A trustee has a professional, legal, and regulatory duty to ensure that the assets held under their custodianship are monitored, maintained, and managed in the best interests of the beneficiaries. Having a professional, well-connected trustee in a well-regulated jurisdiction safeguarding those assets gives beneficiaries that peace of mind. A good trustee, whilst not necessarily being a taxation or legal expert, will have a strong awareness of such matters and will have a network of advisors whom they can work with to ensure that assets are maintained appropriately and efficiently, ensuring all appropriate returns relating to the assets are submitted correctly and on time. When legal assistance or taxation assistance is required, they will appoint the correct advisors to work with the trustee and beneficiaries to ensure the optimum and most efficient outcome. If established in the correct manner, the structure can be very tax efficient, either where individuals are looking to remain in South Africa or looking to move to other jurisdictions. Beneficiaries or associated parties can have 1 or 2 points of contact, which will cover the entire range of assets within the structure, rather than having to reach out to a banker, investment manager, property manager, tax advisor, lawyer, accountant, various advisors, and so on. Trustees will provide consolidated reporting, which will provide an overview of all assets. In terms of financial assets, such as discretionary managed investment portfolios, they will provide an independent view to ensure that the level of risk versus the level of return is appropriate, and ensure that performance is monitored in accordance with an appropriate benchmark. Where the performance doesn't correlate to the level of risk, the trustee will ensure the appropriate actions are undertaken with the investment manager. The ability for a trustee to draw upon their expertise and experience to deal with family disputes, complex family arrangements, and ensuring that assets are available and distributed in the most appropriate manner, considering the settlers' wishes, is also an important part of the trustee role. Thank you.
Thank you, Richard. So quite a lot to think about for a trustee, definitely. So, Hanneke, we've spoken a fair bit already about overseas trusts. I'm now keen just to spend a bit of time discussing onshore South African trusts. With the relaxation of South African exchange control, can you explain how this impacts South African trusts?
Mark, there have been quite a few nuances affecting South African trusts with the new immigration rules, but I think the most important one that clients need to remember, and that I personally think is very good news, is that there is greater flexibility to make distributions to beneficiaries who are no longer resident in South Africa. I may just add is that there are some intricate tax issues that follow that and relating to the vesting of capital gains. But in principle, a trust which was now funded by, for example, say the father, and the father is still alive, and the children have immigrated, say, for example, to the UK. In the past, there were very tricky timing rules that applied to when those distributions could actually have been made. And if you got it wrong, those assets could never actually flow abroad until the funder passed away. The most significant change is that that is now possible while the funder is alive. That creates great opportunities for more flexibility and liquidity to take assets offshore. As with all good news, there's always a little sting in the tail, and this is that you still need clearances for the non-resident beneficiaries. It obviously has implications for the beneficiaries in the new countries of jurisdiction, and there's a process that needs to be followed. But at least it is possible. Up until now, it was not. You were not even out of the starting blocks, so that helps a lot because we still see most of our structures where the vast majority of our assets are held in the South African Trust. That's just a historical issue we sit with.
Okay. Thank you. And staying with you, Hanneke, where a South African Trust is looking to maybe make overseas investments, and that could be for diversification purposes, can this only be done with the approval of its authorised dealer?
The short answer is that a South African Trust still can't make a direct investment offshore. What is required is for an underlying company that is a subsidiary or that is held by the trust applies for a foreign direct investment, which is a different set of requirements that apply to those scenarios. But that is an indirect investment that can be made into an offshore company. So a fairly intricate process, but not entirely impossible, but not directly through the trust.
Okay, thank you, Hanneke. And back to you, Richard. Whilst the trust concept is ultimately the same for both South African trusts and overseas trusts as well, there will inevitably be differences in how they are managed and governed. What matters should South African residents consider once they've made that decision, that all-important decision to establish an overseas trust structure?
Thanks, Mark. I think one of the most important decisions is who should the trustee be. I have my own view on that, but yes, settlers should consider matters such as reputation of the organisation, global reach of the organisation, whether it can provide alternative service lines, perhaps in relation to the settler's wider business interests, the reputation of the jurisdiction of which the trustee is based, taking into account things like OECD and EU grey and black lists. Does the trustee travel into the jurisdiction in which the settler and or the beneficiaries reside? This will help to ensure the trustee understands the culture, drivers and issues associated with the beneficiary's country of residence and will assist them in dealing with matters appropriately. Additional considerations would be language and time zones. Once the trustee has been chosen, the first matter would be to finalise who is to benefit and what the assets are going to be. A good trustee will talk these matters through with the settler. The trustee will then need to have an understanding of where the beneficiaries are currently resident and where they intend to possibly move to at a future date. What are the ages of the beneficiaries? What are their expected capital and income requirements? Is there an expectation that certain beneficiaries will wish to benefit from periodic distributions or use of trust assets such as residential property? Or are the assets to be left to grow and accumulate until a certain event, necessity, or a point at which children attain a certain age and can look for distributions themselves? If there are more complex assets, such as private company shares or trading companies, the trustee will then need to understand what level of governance they will have in relation to that company, and what communication with that company, and possibly whether they will need to be represented on that board. These are all important questions that should be researched and answered prior to establishing the trust, so there is a clear understanding for both the settler and the trustee from the outset. Thanks.
Thank you, Richard. So Hanneke, Richard's really touched on some really important jurisdictional considerations there. On a similar theme, there's been a lot of publicity recently about the need to observe economic substance requirements in many jurisdictions. How would you say that affects the tax position for the typical structures we see families establishing?
Mark, yes, we have spoken a lot about having the trustees in the right jurisdictions and having the decisions relating to the trust made in the jurisdiction where you intend the trust to be registered for tax purposes. The interesting thing about economic substance legislation is I say to clients, it is effective management, which is the point we've discussed now relating to the decision-making process, and to a slightly and to the similar extent to transfer pricing. Economic substance is now a new set of rules on steroids relating to where the right people should be making the right decisions at the right time. The interesting thing is economic substance, other than effective management and your transfer pricing considerations, has nothing to do with tax. Again, it's a regulatory issue. It's an anti-money laundering issue. And the difference with economic substances and the consequence of getting it wrong is a financial penalty. And secondly, that if you don't comply after a period of time, your company is not able to trade in that jurisdiction. With effective management and transfer pricing, you've got a tax bill. With economic substance, you simply lose your license to trade there. So what it means for structures is, again, and that's also why I made the point earlier on, that it is critical that you have the right people in the right place to run your business for you. Because economic substance in essence means, and I mean, it's a complex set of rules that apply. And, we could have a discussion just on that. But for me, the main takeaway point is that you need adequate employees who can perform what is defined as core income generating activities in those jurisdictions. There's a return that needs to be filed every year. It's in process now, I think, for about 2 or 3 years. And in our world, where I am, it's very real. So I think to a certain extent, it helps clients to comply with the tax requirements. But like I said, it's a new set of rules on steroids. And this thing is quite tricky if you get it wrong.
Thank you, Hanneke. And back to you, Richard, for your final question of the session. A lot of clients are put off setting up trust structures because they just think it's too complicated. It takes too long, it's too time consuming. What does the establishment process look like, and how long does it actually take to set up an overseas trust?
Thanks, Mark. There's never an absolute set process or fixed chain of events when establishing a trust structure. And this, again, is where a good trustee will ensure all the necessary matters are fully considered. One very important factor is to ensure the optimum arrangement in terms of tax and legal planning in both the countries in which the settlers and primary beneficiaries are resident, as well as where the assets are located. Where appropriate, a good trustee will already work with tax and legal advisors familiar with offshore structuring in these jurisdictions and can oversee the production and implementation of the necessary advice. Once the advice is finalised, the trustee will arrange for the trustee to be drafted. There may also be a necessity for an offshore company or several offshore companies if there is a wide and diversified list of assets. The trustee will work with settlers or settler to draft a letter of wishes. A letter of wishes is a document that is completed by the settlers, which outlines their expectations as to how assets should be managed, allocated, and distributed. It covers off matters such as what age children can request distributions and whom to communicate in the event of the settler's demise. It's important that this document is clear, understandable, easy to follow, and kept up to date. Where financial assets such as investment portfolios are held, it's important that the trustee has a good understanding of the beneficiary's requirements going forward in terms of capital and income. This will enable the trustee to work with the investment manager to ensure the appropriate investment parameters are in place so that cash is available as and when it's required. Once the structure is established, the trustee will then look to open a bank account. Then, dependent on the assets to be taken into the structure and how they are to be utilised, they may then establish an investment portfolio with a suitable investment manager, as well as ensuring they undertake all the necessary arrangements to take ownership of other assets, such as conveyancing for properties, executing stock transfer forms in relation to shareholdings, and completing any agreements or custodian arrangements in terms of any other assets. Dependent on the complexity and assets to be settled, the entire process can take between 6 weeks to 6 months potentially.
Okay, so well, clearly a lot to think about at the point of setup, and it's obviously important to get that bit done properly. So thanks for that, Richard. And Alex, having given you a bit of a breather for the last few questions, the final question is yours. We've talked a lot about emigration earlier from South Africa to the UK, but there certainly seems to be more relocation options than ever before. Could you talk us through some of the other popular relocation destinations that South African clients often consider?
So we see clients going to Australia, to Canada. I think Mauritius is probably one of the more popular ones, given proximity, as well as a very beneficial double tax treaty that it has with South Africa. More and more we're seeing European countries have quite attractive, I suppose they're called golden visas now, which maybe doesn't have the best connotation, but visa regimes to attract internationally mobile clients. So we do see a few clients taking up some of the options in Portugal as well as Italy. It's more of a recent development, I would say, and that's really looking at obtaining an EU passport, as well as they do offer some quite tax efficient regimes in the same way that the UK does as well. Occasionally you see the US as an option. Obviously that has, that can have a whole session on its own in terms of the complexity of moving there. But I would say more and more we're seeing almost the European countries competing with the UK for those kind of high net worth internationally mobile clients, coming in on a benign tax regime.
So to wrap up, I'll leave you with a few key themes. Firstly, moving from one country to the next represents a major life event and causes the clients we advise a lot of emotional anxiety. It's more complex than many would think. From the client perspective, there are so many important tasks to deal with: when to move, understanding the tax and legal position, where are they going to live, can they work overseas, where are their children going to be educated. And clients who achieve the best outcomes are usually the ones who work with a team of specialists made up of banks, wealth advisors, lawyers, accountants, trustees, property specialists, whoever it may be, just to make sure all bases are covered properly. And I think secondly, the value of trusts remains as significant as ever. That's both onshore South African trusts and overseas trusts as well. As Hanneke highlighted, the tax, legal, and especially the regulatory environment continues to evolve at pace, hence the need for settlors and beneficiaries to refresh their advice on a regular basis. And finally, I would echo Richard's point that tax is often not the main driver for setting up structures, as many other considerations come into play. And given increased regulation and the requirement for such high standards of governance these days, appointing a professional trustee is always the way to go. So on that note, I would like to thank the panel for providing such insightful guidance and advice, and I will hand back to you, David, to open up the line for questions.